I'm Greg Hunter. Welcome to USAWatchdog.com. Our next guest, the last time he was on, said there was a bubble in confidence in central banks. You know, that central banks could prop up the global economy forever. He says that bubble is going to pop. It's a huge, enormous bubble. And he is back on today. He is Michael Pento of Pento Portfolio Strategies. He all has his website, Pento-Stock.com. Michael Pento, thank you for joining us today on USAWatchdog.com.
Thanks so much for having me back, Greg. Pleasure to be here.
Well, I just want to kind of start off with the elephant in the global room, and that is China. I mean, they're doing badly, and people think that China can do badly and we can do fine. Is that true?
It couldn't be any further from the truth. You know, global debt is up to $200 trillion. And China alone, since 2007, their debt is up 300%. But this kind of debt that they raised wasn't debt from the private sector. It came by government edict. What was this debt for? To build empty cities, to build airports without planes, to build bridges without cars. These are unproductive assets. And that's why the debt to GDP ratio is not only skyrocketing in China, it's skyrocketing all over the globe. And that means Japan, Europe, and yes, even the United States. So there is no delinking, Greg, whatsoever. China was responsible for virtually the plurality of global growth since the Great Recession ended, supposedly in 2008. And now that demand is collapsing. That's why you see Brazil, Russia, Japan, Europe, Australia, all of these nations are either in recession or growing with a 1% handle. No, my friend, there is no such thing as decoupling in 2008, and it isn't true today.
The Chinese, and like everybody else who's holding these, I don't know, John Williams says at least 16 trillion liquid U.S. dollar assets held outside the country. So if they get into trouble, aren't they going to want to cash that out? Haven't they been selling our bonds? I mean, isn't that going to be...
Well, they are. Greg, they are. Those are currency reserves. Much of that is held in U.S. treasuries and in U.S. equities. They are selling those assets. Why are they doing that? They're trying to support the renminbi, which, by the way, they wanted to free float for many, many years. It was going to rise. And now when they free float the yuan or the renminbi, it collapses. So they have to sell their currency reserves. And what do they do with those currency reserves? Buy back their own currency. So, the global currency situation is going to go in hyperdrive if the Fed actually follows through and goes on this protracted rate hiking campaign. See, Wall Street is a myriad and a plethora of myths, Greg. They love to promulgate myths. Now, one myth that's out there today is that the Federal Reserve may go and do a one-and-done rate hike. Wall Street loves to hang their hat on these myths. But where has that ever been done before? Previous rate hikes have always been about 300 basis points. The last one was 425 basis points. The Federal Reserve has something called the dot plots, which pretty much tell you where they want to be. They want to be at 1.6%. That's the median dot plot at the end of 2016. They want to be at 1.6%. The only reason why they won't get there, and I don't think they ever will get there, is if the global economy continues to collapse. And by the way, it's exactly what's happening. The global economy is imploding, and our clueless, feckless Federal Reserve, who thinks they're fighting inflation, and I'm glad they are. I think they should just sell their $4.5 trillion balance sheet and go home, and we'd all be better off in the long run. But they're fighting some kind of phantom inflation, and there is inflation in one area in particular. That area is asset prices. That's where all the inflation has gone. But the real battle is this global collapse of commodities. Commodity prices are at the panic lows, even lower than the panic lows of 2008. And we're having a global implosion of growth due to the fact that China is no longer a sustainable communist regime.
So are they seriously going to raise rates? I mean, the way they can't just do one and done. I mean, they want to normalize rates. I mean, they don't want just a 25 basis point rate hike.
Why do you think, Greg? Why do you think it's been 7 years and they have been at zero? I mean, these people were supposed to start hiking rates in 2010 when the economy achieved so-called escape velocity that never came. We have grown. the United States government GDP has increased an average of 2% since 2010. Now, the Atlanta Fed, which has a highly accurate model, is on record saying that Q3 growth will be just 1.5%. So global growth is slowing. U.S. growth is slowing. If you look at their best measure of inflation, which is the highly bastardized core PCE, that is falling. It's way below their 2% target. Listen, we do have inflation. I said before there wasn't inflation. There is massive inflation in asset prices. There's inflation at the grocery store. But the way they measure inflation, it is deflation that they're seeing right now, not inflation. So as to why they want to raise rates, they want to raise rates because they're just become too uncomfortable at being at 0% for 7 years. And they're so full of hubris, so full of arrogance that they want to claim victory and say, look, we saved the global economy. Keynesian central bankers printed, in the case of the U.S. Federal Reserve, printed $3.7 trillion, manipulated artificially in only the style Al Capone could have done, printed massive amounts of money, took interest rates to 0%, left them there for many, many, many years, 7 years, totally artificial in nature. Interest rates would never be this low if left to market forces. And now they want to say, look at us. We've done a great job. Let's declare victory. Mission accomplished. What a big collapse of confidence there is going to come from faith in central bankers. It's right around in fact, Greg, it's here. It's happening now.
So you think they're going to go ahead and pull the trigger and do a quarter of a point?
Yeah, this week, Thursday, September 17th at 2 p.m. is the rate hike decision. The FOMC will come out with a decision to either raise or not raise. And now you're asking me to read the minds of people who are, I believe, schizophrenics and feckless incompetents. So I don't think they know what they're doing at this point. I don't think Janet Yellen knows right now what she's going to do. She's most likely watching the stock market. And if the stock market stabilizes around here, they might go on Thursday. If the stock market has a really bad week on Monday through Thursday, Greg, they're not going to move. And they're going to say time is not exactly right, and they'll hold them in abeyance. Now, the last time the Federal Reserve was supposed to hike rates was the spring of 2015. Gold mining shares soared by 25% in the ensuing few weeks. So, you have to be liquid in this market. You have to be very dynamic in your investment strategy. And I will tell you this, if they do not hike, I'm going to even load up more on gold mining shares, which have been beaten down mercilessly. As you know, they're down about 85-90% in the last 3 years.
Some people think that if they're damned if they do and they're damned if they don't. If they raise rates, people like Nomi Prince says, they'll crash the market. The World Bank said if they raise rates, it'll cause, quote, panic and turmoil, end quote. The World Bank. And if raising a quarter of a point is going to create panic and turmoil, how weak is the economy? And if they don't raise rates, everybody will say, OMG, we really don't have a recovery. I mean, aren't they just damned if they do and damned if they don't?
Greg, we don't have a recovery, as you well know. I look at Japan. Japan is going into their third recession since Abenomics took hold in 2012. 3 recessions. And the Bank of Japan is printing yen like it's going out of style. Like I said, even Al Capone couldn't imagine an ability to counterfeit money so quickly. And yet they are going to have their third recession in the last 3 years. So it's just a train wreck. What does quantitative easing really accomplish, Greg? All it does is inflate asset prices. It inflates equities, it inflates bond prices, and it inflates real estate. Other than that, it's really just a tangential effect on the underlying economy. And in the long run, it's extremely detrimental.
So why is the World Bank saying they're going to the Fed, they're warning, they're going to create, quote, panic and turmoil, end quote. Panic and turmoil. Do you think that's what's going to happen if they bump it up?
I do. Not only the World Bank, but the IMF. Listen, as I said, I want to go on record. I want to be very, very clear. I despise the odious institution of the Federal Reserve. I think the cost of money, the price of loaning money and borrowing money should be and must be left to the market. If you do leave it to manipulators, 12 manipulators at the Federal Reserve, you're going to have massive imbalances and distortions across the economy. And that's exactly what's occurred. So here's why I think. Let me just go through a list, and I'll tell you why I think if they raise rates just 0.25%. As I said before, there are dot plot goals for the Federal Reserve. They want to be at 1.6%. Whenever they begin, whenever liftoff begins, they have publicized their intentions as to where they want to end up. But look at the state of the stock market where we are today. Margin debt is at an all-time record high.
Wow.
Mutual fund cash levels at 3.2% are at all-time low. This is the most overvalued stock market. It's either the most overvalued stock market or the second most overvalued, depending on the metric you look, in the history of markets. If you look at price to sales, it's 1.7%. It's usually 1.4. If you look at market cap as a percentage of GDP, if you look at market cap as a percentage of the replacement cost of companies, these are at all-time record highs. As I said before, global growth is collapsing. The Atlanta Fed is clearly telling you that Q3 growth is going to be just 1.5%. That's much lower than the 2% average over the past 5 years. And now we're to believe, if the Fed starts to raise interest rates, that they're going to be increasing the cost of money, not one and done. That's a Wall Street fantasy. That's how I began the interview. It is a myth. Don't believe it. Their intentions will be to go on a rate hiking cycle, taking the Fed funds rate to 1.6% by the end of 2016. And if that's the case, if the market is extremely overvalued, if revenue and earnings growth is negative, if global growth is falling, if U.S. growth is falling, if margin debt is at a record high and cash is at a record low, and now the only thing we had going for us was trillions of dollars in QE and 0% interest rates, and now we're going to lose that. Why do you think this, and I know you don't think this, but why would anybody think the stock market is going to hold up very well? I think the stock market crashes. I think it's going to be the same thing that happened in 2007. And as the stock market goes, so goes housing and so goes the economy. It happens over and over again throughout history, and it will never be more so true than today.
So if they don't raise rates, I mean, they were whacking gold last week, down 10, 11, 12 bucks, silver too. So are they getting ready for, we're not going to raise rates, and then it's off to the races for gold and silver? Do you think gold and silver could vault higher?
Every time, Greg. I said, the last time they just hope, the market was preparing for a rate hike. Gold last week didn't do very well. Gold mining shares didn't perform very well, although I think they're in a really long, protracted bottoming phase. But guess what? If they don't go, then the next meeting where there's a Fed conference isn't until December. So October, they're not going to move, and I don't think they're going to move in November. They're probably going to move in December, maybe, if the global economy doesn't fall apart. So you have a few months here of clear sailing, so there's a lot of short covering to be done in gold mining shares, and I'm looking for another 25 to 30% move if they don't go on Thursday at 2 p.m.
Is the smart money selling this market? Is that what the smart money is doing, the big money?
I don't know if you call me smart or not, but I'll tell you one thing. I am, last time we were on, and you were very wise and prescient and guessed where I was, and you were exactly right. You said cash and gold. I added something else to my portfolio. So I have a lot of cash, about 50% cash. I do own about 20% gold mining shares. I am also short the market, and I have been so since around the time of our interview last, it was about a month or so ago.
Wow, you made money.
Yeah.
That was down 2,000 points since what, May?
Very well. Short positions are doing very well. I might cover those positions if the Fed does indeed stay on hold on Thursday, but I will be adding to my mining share exposure. You have to be fast and nimble in this market, Greg. There's just no standing still. The modern portfolio theory of investing is a disaster. I think the time is coming, and probably has already arrived, when you're going to see stocks and bond prices fall in tandem because of the insolvency condition that we have engendered across the world. $200 trillion in debt is an awful lot of debt on a global basis. And as I said before, a lot of this growth came from China. They were responsible for about 33%. The plurality of global growth was coming from China, and that was a huge fixed asset bubble dictated by increasing government debt, and all of that debt went to unproductive assets, which just tends to soar the ratio of debt to GDP.
What do you make of this gold, the news coming out that COMEX has 200 paper contracts at least to every 1 ounce of physical gold? I mean, it's stunning to me.
Well, that means that the physical gold market is highly leveraged. And I've always encouraged my clients, take physical possession of your gold. And I don't even want you to store it into some foreign vault. If you want to hold physical gold, hold it physically. That means in your own possession. If we keep doing that, and I encourage all of my investors to do so, we are going to break this highly leveraged gold short that comes from Goldman Sachs and these massive manipulators of markets that seem to rule Wall Street.
Do you think
it's really Greg, it's really an odious institution. I got to be honest with you. I mean, Goldman comes out with a call today. They want last week that they wanted oil. They believe oil could go to $20 a barrel. Well, Goldman also thinks that the S&P 500 is going to go higher. So, can you come up with a cogent scenario where the price of oil would collapse to $20 a barrel, and yet the S&P 500 would continue to increase? It's totally antithetical.
Could they be getting close to a point to where the COMEX says we're paying you in cash? Sorry. I mean, could they run out of gold at LBMA and at COMEX? I mean,
I think they are. I think they're running. I think they're absolutely running out of physical gold and silver. I want to continue to urge investors, take physical possession, force that liquidation, force that margin call, force them to go out and cover their shorts.
Michael Pento, a financial expert, a money manager, an analyst, all the above. Michael Pento of Pento-Port.com. That's the website. It's Pento Portfolio Strategies. Michael Pento, thanks for coming on today and taking us to school and giving us an update of the markets. I think you're going to be right about the confidence in central bankers. I think people are going to be losing it. The confidence in central bankers.
Greg, and thank you so much for having me back on the show.
Thank you, sir. And your website, Pento-Port.com. I'll put a link up after the interview, as I always do. For you folks watching this on YouTube, just go to the link at the bottom of the right through, and you'll go to the USAWatchdog.com site. Scroll down to the bottom, and you'll find Michael Pento's Pento-Port.com. Michael Pento, thanks again for joining us today on USAWatchdog.com.
Thank you, Greg.